The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, good day to you. Welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. I've got my wine in shot. You do not have yours. Cheers. We made it to the end of another week. A week where the market, it was so dominated by inflation out of the US and the PPI that we had overnight. But I think the market is virtually unchanged from where it was this time last week, despite all the volatility.
Do you know, it could have been worse. And I think I said that already once this week. But when you look at today's market performance, we did see tech, I suppose, come to the rescue last night. Also, that PPI read in the US calmed a few nerves. But with the market down by about 0.3%, for the week, we are still mildly positive, only about 0.2% higher. But you know, there was a lot. We had the FOMC minutes on top of those inflation reads. We had Chinese inflation. We had ECB, of course, the VOC. And here it was pretty quiet here, though.
There was not a lot going on here, actually, which we don't mind. But, of course, when it comes to the overall week, a little bit of a rough ride. I think actually the ASX is unchanged over the week. So if you look at the chart, it's kind of just, it went down and then it sort of, as you say, it could have been a lot worse. About 1.5% off its 52-week high though. But you were saying a bit of a strategic slump.
Yeah, well, Domino's, again, sort of no massive corporate news, but that was a noticeable slide coming from Domino's today. Even though it's held its strategy day, it's looking to, revisit China, continue with the progress in China that it hopes to make. But yeah, investors, I suppose, aren't necessarily buying the story. And then inflation overreaction with a question mark, I put, because our guest, that's one of the tidbits I picked up in his notes.
Oh, Shane Oliver, yes. I was like, which guest? We've had so many. But of course, our favourite Friday guest, who we have not seen for a couple of weeks because he's been on holiday. So we're very excited to get to Shane shortly. But let's have a quick look at some of the sectors of the day, kicking it off with utilities today. There was a nice pickup in some of these. Genex Power, look, up by about 5%. I think there was a little bit of news out regarding Genex Power.
Well, it is under takeover approach. So I saw that breaking late as well, and I don't think that I've got it right at my fingertips, but I wonder what's happened because many people that I spoke with in the analysts and that were saying that they were really looking forward to seeing this one evolve as an ASX listed entity, but no, it's entered into that binding transaction. With J-Power to acquire all of its shares and unanimously recommending that shareholders vote in favour of the scheme.
All right, let's have a look at what other sectors we are keeping an eye on. Of course, energy, so much volatility. I had a great chat with Daniel Hines from ANZ about what's happening in the commodities space. And with global oil prices a little lower due to that PPI figure overnight, we saw a little bit of momentum coming through to the downside there. Woodside and Santos off. Santos, of course, had its AGM earlier this week. But look, Boss Energy, the uranium space, up 5% there.
Yeah, our guest yesterday, Fraser McLeod from Shaw Partners, very big on the uranium bandwagon. Although, in fairness to him, to be honest, he was on that wagon long before everybody else started jumping on. So, yeah, just I
would say he's almost driving that.
Yeah, I was going to say, contradicting myself. Gosh, I've only had a sip of wine. You wouldn't think I'd be making this many mistakes. Consumer discretionary names as well in focus. I thought today CBA just put out this amazing chart pack talking about their interest rate expectations, but also just, we talk about the rate hiking cycle being behind here in Australia as opposed to what they've seen in some other countries overseas. But he was talking, or the charts were really driving home the transmission is so much sharper and quicker here in Australia because of our exposure through the mortgage market. And of course, he mentioned, or the chart pack mentioned, a lot of those taxes that are essentially taking money out of our hands. So, you can explain why we're seeing such a pullback in consumer spending.
All right, let's have a look at some of the corporate stories. Boral's board backing this revised bid from Seven Group. It's a $1.9 billion bid. It's still the offer value $1.70 per share, but there's sweetened dividends. So Seven has waived some of those conditions, and Boral's independent bid response committee now recommending that takeover.
Cettire, our stock of the day, down by 6%. Even though, when you read the release, all the numbers sound amazing, there's still, in the view of my guests, at least on the call, lots of unanswered questions hanging over that stock. Star Group, could it get worse? Yes.
It could,
it's recording steep drops in revenue from gaming rooms right across the country.
And AMP had its AGM today, a slight uptick there. The stock of the day, though, of course, was Cettire. Who did you speak to?
It was Claude Walker from A Rich Life and Luke Winchester from Merriweather Capital. Let's have a listen.
What the market's also reacting to is, what isn't in there. Like, are there concerns about, all of these other issues going forward, and as a result, that's what's probably going to play out over the next 6 months or however long it takes for that either to clear the air or to become an ongoing problem. There was a bit of a comment on the US sales tax at the bottom of their announcement today.
Yeah,
and that might be more what's sort of driving the share price.
If you're there, look, this result operationally, I don't think it gives you a reason to hold it. Your thesis is intact. It's still growing to the moon, still profitable. If you've held Cettire before today, this update doesn't change anything. What I love, though, is that if you're a shorter of the stock, I don't think this update changes anything either. Like, this will just keep being a great stock to debate, I think, into the near future. But I'm on the sidelines. But let's say a hold. Yeah.
Welcome to the COB, Shane Oliver from AMP. Welcome back from holidays. Do you have a bit of a tan, or, well, we can ask you later where you've been. But we're so happy to have you back in a very big week. The inflation print was always going to be in the US a make or break. What did you read from CPI and, of course, the PPI that came in a bit softer than expected?
Well, there's no doubt the CPI was a problem. 0.4%. The market was going for 0.3. We really need to see 0.2%. That said, the PPI, as you pointed out there, came in a bit on the soft side, so that was good news. I think there's also a danger here in overreacting to all of this. There's no doubt that the Fed will continue to sound cautious going forward, and it probably does make it a lot harder to do a June cut. You could almost say that's off the table unless that inflation number starts falling rapidly again. But we've only got one more CPI print before the June meeting. But I do think we will see a cut from the US. I'm not as negative as the market's become on that front. I think we've gone from one extreme, factoring in 7 cuts in the US, to now less than 2, closer to 1. Similar story in Australia. We've gone from one extreme to the other. So there's a danger here in overreacting. But that said, that those inflation numbers are a concern. You can't deny that. But of course, if you look at other countries around the world, Canada still on track to easing around mid-year. ECB, same story. Both those countries have much weaker economic growth and have seen their inflation numbers surprise on the downside. So I think here in Australia, we're a bit more like them rather than the US. Our economic growth rate is less than half what it is in the US. Our consumers are virtually flatlining it. Per capita spending here is actually going backwards. Very different story to the US. And likewise, it will probably end up being a very different story on inflation in Australia, much lower than what we've seen coming through in the US. So therefore, I'm not overly concerned about it, but you can't ignore it. And it's come at a time when share market valuations are stretched and investor sentiment is very high. So it wouldn't surprise me if we see more volatility in markets before it ultimately settles down again.
Yeah, okay. So when we think about what we learned this week then in terms of the NAB business survey, Westpac monthly consumer confidence this week here in Australia, how does that help colour in the lines around the view that you just painted around Australia?
Well, it certainly helps. Consumer confidence is at recessionary levels in Australia. And if you look in the US, you've got 2 measures, University of Michigan and the Conference Board. They're both a little bit different. One's above average, the other one's below average. But on average, US consumer confidence levels are about at average levels, in contrast to Australia, which are really depressed, as you can see in that chart there, the red line. And in the last couple of months, they've gone back down again. Of course, the other key reading in the last week was the inflation indicators, inflation pressure indicators coming out of the NAB survey. And they show a further leg down in selling prices and cost pressures for Australian companies. So I think that's a good sign, and again is going in a different direction to what we're seeing in the US, where recent business surveys had shown an uptick in selling price pressures.
Shane, the other point is really what's happening in China. I mean, there were so many pieces in the puzzle this week, but deflationary pressures persisting at the same time that, we are starting to see quite a lot of demand in commodities or commodity prices rising. What's your sort of take on the overall picture in China and how that plays into our economy too?
It's an interesting one. China is messy. This is a long way from where we were pre-GFC, let alone 10 years ago. Obviously, those inflation numbers very, very low, as you can see in the chart there. I like the core inflation reading. It gives you some guide to underlying pressures. It's not quite deflation, but it's just 0.6%. That's if you exclude energy and fuel. So that's quite soft. And the weakness in the PPI, producer prices, tells us there's potentially more downside to consumer prices. So that's a concern. Flip side is, of course, that the economy seems to be motoring along at an okay pace. It's not fantastic. We get an update on that next week with March quarter and March data coming out of China, and I suspect it's going to show more of the same. The economy is still growing, ticking along. Reflecting all of that, we have seen the iron ore price come down from $140 a tonne US earlier this year on stimulus hopes in China. We haven't really seen much in the way of stimulus, a little bit, not a lot. And that got below $100 a tonne, but it's now pushed back up again to around 106, which is a possible sign that it's stabilising. And then, of course, if you go to the other extreme, you've got the copper price, which is looks like it's broken higher technically, and looks like it could reach all-time highs soon, or at least exceeding the highs that we saw a few years ago. So that's, you could argue, is a positive sign. Sometimes analysts refer to Dr. Copper as a sign of how the global economy is going, and it's telling us that the demand for commodities will pick up. And you can make a positive story there because we haven't had a lot of investment in new metal mines over the last few years, at least not since the last mining boom. You've got the demand coming through from electrification and decarbonisation, which will wax and wane, but that broad trend is there, and you've got more defence spending. So you could argue the structural argument in favour of in metals like copper is actually quite positive. And historically, that is positive for our economy and markets as well, even though there has been that divergence lately. Normally, the Aussie dollar tracks up with copper price, diverged lately, but if the iron ore price continues to recover, then I suspect that relationship will start to be restored again.
Shane, just moving away from sort of the macro, I would like to get your view on US earnings, because a number of analysts we spoke with this week said that particularly in the wake of that inflation read, there's a lot of potential volatility that could be inspired by earnings, which of course kick off tonight with the big banks in the US.
It certainly does, and this is April as well. I think April is one of the strongest months seasonally in US shares. So that's why you don't want to get too negative at this point in time, even though you've got valuation and excessive sentiment levels towards shares. Just on that front, the pattern in recent times has been that earnings expectations are beaten by a wide margin. The current consensus, as far as I can make out, it depends on what survey you look at and what service provides it. The current consensus is around 4% earnings growth, down from about 8 or 9% in the December quarter. If recent history is any guide, then that will be outperformed by about 4 percentage points. So we'll end up with earnings growth around 8% over the 12 months to the March quarter. So far, there has been a handful of companies that have reported early, and they've come in something like 10 to 15% ahead of expectations. So that augurs fairly well. The other thing that augurs fairly well is that the US economy has been quite strong through the March quarter. We haven't got GDP data yet for the March quarter. It comes out later this month. But it's telling us that, that there's a potentially upside risk to those earnings numbers. So historically, there is a bit of a tendency for the US share market to rally through earnings reporting seasons, and of course April tends to be one of the stronger months in the US calendar for shares. So that's why, yes, there's that those risks are around regarding share markets, and I'd be more cautious going forward after those massive gains we saw up to the end of March. But by the same token, earnings could be a source of support, at least in the near term.
Indeed. All right, Shane, what's on for the weekend? Is it something light like Coco Chanel or Anne Rand behind you?
Well, it's funny. Someone gave me Anne Rand for Christmas, but partly I'd asked for it. And the problem is that
very
when you look
big.
at the text, it's ultra small. It's very, very dense, and there's 700 pages there. But I am halfway through the Fountainhead. I got Atlas Shrugged and the Fountainhead. Maybe I'm having an old age trend towards libertarianism or conservative economics. I don't know, or maybe I'm just counter-reacting to all the made in Australia protectionist stuff that's floating around. And that's why I'm looking into this stuff. But I must admit, I find her book, The Fountainhead, anyway, it is quite a good read once you get into it. You need a magnifying glass, but once you get into it, I am actually enjoying it. Anyway, apart from that, it does look like perfect weather, so hopefully I'll be able to get out and do some voting this weekend and take the Fountainhead with me.
We're all getting older, Shane. You might have just heard Nadine earlier say she was fascinated by a chart pack that came across her desk. And I think when I met Nadine 20 years ago, those words would not have come out of her mouth.
I also didn't need glasses to read a book like that 20 years ago either. Yeah, interesting. I'm reading a book, if we're sharing. It's called The Women, and it's based on combat nurses in Vietnam. And boy, is it compelling. And I'm pretty sure that it's the same author of Where the Crawdads Sing. I'm pretty sure.
I love that book.
Such a good book.
I also love The Kite Runner, which I could see behind Shane as well.
Oh,
that's a great book.
Yeah.
And I've seen the film of Where the Crawdads.
Yeah, it's a great movie.
That was a great book.
No, you need to read the book. Read the book,
is
Shane.
Great, but
way better.
I watched the movie coming back to Australia on a plane, actually, and I was bawling. Anyway, have a great weekend. Enjoy the sunshine. Thanks, Shane.
Okay, thank you. Take care. Bye.
Oh, back to markets, shall we? Let's find out what moved the market today to the upside. In percentage terms, of course, this is not really indicative of market cap or weighting, but Chalice Mining up by about 10%. Regis Resources is on the list as well, so you can really see mostly the theme there. But Net Wealth making a bit of a comeback after being sold down quite heavily yesterday on the back of its update on FUM. And having a look at the losers today, Star Entertainment, we touched on Domino's, of course, that trading update. Although interesting, you were talking about China. I think they're going to continue to push into Japan as well. And sell down 3.5%, and Nickel Industries and Liontown Resources under pressure too. So small to medium, we'll just whip through these because I know it's a Friday. We thank you for listening and watching, but we get it. Look, resources, you can see that very clearly on those names. Aris, Encounter, Ensign, all moving higher. Avita Medical, yet another bad day in the wake of its sales update yesterday, down by 16%. And Big Tin Can was out with the quarterly yesterday as well. It's off by 6%. All right, having a look at what is on overnight. I think China's trade balance might have come through earlier, but import prices from the US FOMC members, Bostic and Daily, I feel like they might have spoken overnight too. Let's just flip ahead to the week ahead now. But what wasn't on there was the earnings. So don't forget. Yes. Yeah, don't forget. We've got JP Morgan, we've got Citi, we've got
State Street, Wells Fargo, BlackRock. US retail sales next week. Industrial production, China GDP will be a big one, as will be the jobs data here locally. Retail sales and China's PBOC MLF 1 year as well decision. So a lot for us to keep an eye on.
A lot for you to catch up with on our website if you missed anything today or through the week, ausbiz.com.au. Of course, we'd love it if you could tell your friends about us, if you could tell them about the COB podcast, and if you could subscribe to, I'm asking a lot on a Friday.
You are asking a lot. Okay. Maybe one thing at a time. Sign up to the COB newsletter and we'll see you there on Monday again.
Cheers.
And from 9:40 Eastern. Cheers.
Have a good weekend.
Have a good weekend.
See you Monday.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach, 1980s John McEnroe.
Pathetic! Horrible! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.